All right, y'all. Welcome back to another market breakdown. I'm here to help you navigate through the market so you can make better trading decisions for this new trading week. All right, so let's hop right into it. Ain't gonna be too long with it because obviously it's early in the morning. I'm getting ready for work, so I was supposed to do a video last night. I had too much going on, so I was tired. But hey, so for those who don't know, I at least do one video once a week doing a full market breakdown so you can be able to see what to expect for the market, and you can be able to decide what you want to do with it. So right now we're looking at DXY. So why is DXY so important for me, right? So obviously I trade yen and I trade EU and I trade gold. So when the dollar is constantly pushing up, that put pressure on EU. Um, Also, that let me know yen is going down as well because yen is going against the dollar. So obviously, let's get right into it. Right. So uh, last week, I ain't gonna lie, I expected last week to be a bearish week for U.S. dollar. So we can see here that after we came into this level right here, we can see how price pushed up. The only reason why I was expecting for this week to be, bearish was because we was already bearish this week here, right? So by price going bullish right here, is a clear shift. Now, right now, we're still in this transition phase. You can see how we slowly push it up. But like I told y'all, for those who've been keeping up, from a quarter perspective, we was actually bullish the previous quarter. So that's probably price pushing down how it's doing, and now pushing back up. So this could be where price could actually, from this point right here, we can start actually climbing up. And once it break above this level, then we know for sure, for a fact, that we could be seeing U.S. dollar definitely start taking out these highs up top right here. So that's kind of what I would be expecting it would get above here, which we getting very close. I can see that happening if it does happen, right? So obviously we are bullish this week. We can see last week that we had this high on this candle here, so you can see here that we had this high, and then we had this low on this candle, and then we had this fail low of this bullish candle, followed by a higher high, breaking the previous high on the previous bearish candle. So that is a clear breaking structure, right? So obviously, if we go to the daily, we can see we are closing bullish on the previous day, and day before that, and day before that, and day before that, followed by high highs and followed by higher lows. So that gives me a clear view that we are in a bullish direction, even on daily time frame. So the weekly and daily lines up. So guess what that means? We're bullish on the daily. So what can I expect for this week? What I expect is what price doing right now. It was overbought on the RSI in the 4-hour time frame, right? We closed very strong, which is good, right? So I expect for price, as you see, I have my levels already marked, my weekly golden levels, what I call them, right? I believe that price does retrace at a certain percentage every single time, and it always, retrace back up in this direction, right? So we can see here that we closed bullish over our RSI. I expect price to retrace down like I was doing into one of these levels right here, and at some point I expect it to make some kind of clear breaking structure or some kind of positive movement, like movement from the candles, breaking each candle. So with that being said, I'm definitely bullish on DXY for this week. Damn, let's see. My light now came down. Alright, so I know that's gonna happen. Alright, so that means EU is bearish. Obviously, I don't really mark EU too much, but I'm going to detail. Obviously, EU is just literally the exact opposite of DXY. Same structure, everything is that opposite. So I'm not gonna go too much into this. Just know I'm bearish. I'm bearish on EU. So you can see we have this nice setup. I can expect EU to come into our 10%. 10%. Let's see. So right now we're actually above 10%. So 30% will be right here. 60% would be like right here, and then 1% be right here. So I would expect price to tap into somewhere with push up into what's somewhere within this range and start come back up. And a good rule of thumb, look at the RSI. We'll see the RSI back around this range here. It's a good rule of thumb I can go by. All right, so UJ, I don't trade UJ, but I look at UJ as another confirmation. I trade yen, so look at UJ as another confirmation to understand uh, what to do. So you can see here to confirm yen. So you can see that we're bullish on yen as well too. I mean on UJ. So obviously I expect UJ to be bullish this week as well. And then we have yen. So this is where the one I would be trading yen. So yen, you can see we were bearish on yen. Obviously we're bullish on DXY. So obviously yen versus US dollar. So I expect DXY yen to be bearish this week. So I expect yen to push up, retrace up at a certain point, and then make a break structure and start going back down. So that's what I'm looking at for yen. Just simple and clear as that. Just from a quarterly perspective, and we look at from a quarterly perspective, we can see how yen actually is in position to drop down too. So you can see how on the last quarter, you can see how we actually closed bearish on the last quarter. So you see how everything kind of lines up. So you can see how that pressure of price still wanting to push back down. So since it did close bearish, we're going to continue to go with that flow, right? The only reason why I was kind of iffy because every time we come to this area, you can see last time we was here, we bounce up, So it's going to be very interesting. And we turn the candles on, so we bounce up, So I most likely, like I said, we bearish. So I'm going to continue going with that for yen. Unless, DXY don't, break back up, which I don't know. Like, for example, right? Let me get a clear example of how I know when price won't work in my favor and not to get in. For example, if we go to, like I told y'all, I was bearish on DXY, right? We can look here and we can see how on here, if I'm bearish on DXY, then that means I expect price to push up and then at some point push back down. As you can see, it never made a clear breaking structure. It just kept going up. So that's giving me a clear idea. Hey, it's not time for me to get in. So obviously for this week, it was not a trading week for me. Well, I did trade gold, but I took a loss on gold. I'll tell you why. So gold, obviously I'm bearish on gold this week. Look like we could be pushing more down. And I messed up last week on gold because I was not watching yields. And so whenever you have rising yields and rising US dollar, so obviously I went bullish on gold only because you can see on this previous candle here, we closed bullish right here. So I was like, okay, so we closed bullish and we on our first support level of this quarter. So all these levels you see right here are my quarterly levels from every quarter for this quarter. So that's give you a bigger picture of what that looked like. So I'm very passionate about this. So I take this very serious. I've been doing this for a long time, so I know exactly what I'm doing. But you can see here from a quarterly perspective, let's kind of remove line graphs and focus on this. So you can see from a quarterly perspective, you can see how we closed bullish the previous quarter. Now, the only thing I did not like was this huge rejection. So I know it's going to be some selling pressure for this quarter because we had this huge rejection. But I was like, I'm going to still go bullish. I expect some selling pressure. Could be going deeper than what it's supposed to. So these are like the levels I expect price to go down to for this quarter. So this is the first level that it tapped into. So now you understand that, right? So now I'm like, okay, hey, look. Before this candle here, we closed bullish, right? Let me replay this to here. Close so you can get an idea of why. So in real time, the week before that, it looked like this. It closed bullish. So when I saw that, I was like, oh yeah, easy money. I'm gonna be bullish on gold for the next week. So I expect price to retrace down and then go back up. All right, cool. I'm X out of this. Right. So then, right, I go to the 4 hour. Right, I expected. So that last week, right. This is why I got in. So on that last week, damn, my nose stopped up. I can feel it. But see my son nose been damn, stop. Don't be sneezing in my face just now. I'm sneezing. Hold on, I gotta spit. I can't help it. Give me a split second, y'all. All right, I'm back. So as you can see on that previous quarter, right? Let's kind of rewind it back to here. I'm tell you why I just went here and bought. So obviously I go by two ways, right? So obviously on that previous quarter, price came down to here and it broke up like this. So me seeing that and see how it is on the baseline, I'm like, F it. I'm about to go ahead and buy it. Not going where I messed up at. I did not go back and recheck the yields because when you have rising yields, gold will go down. And especially going down if you got rising yields plus rising dollar. So if you got rising yields plus rising dollar, oh yeah, it's definitely going down. So X out of this. Fast forward, I bought it around here, and obviously it's just slowly dip. Obviously, I have this rule that once I enter a trade, I can't get out of it. So I go back. I know I was gonna lose a trade. I know I messed up because once I look at yields, I was like, yeah. So obviously, so we're pretty much back on this support level, our first quarterly level, right? And we oversold, so it's gonna be interesting to see how it's gonna go. But obviously, I expect price to retrace up into here and then start going back down more deeper into these levels. So I'm bearish for the week on gold. And the only reason I'm bearish because one, like I told you, DXY is bullish for this week. So if I'm bullish DXY, right, and then we got yields, we can see. I'm not gonna really go too deep into yields, but we can see here clear as day, yields shot up. So like I told you, when you have rising yields, especially how strong yields moving, yeah, you can expect obviously it retraces that back down too because it's overbought. So it got to retrace down. It can't just keep going up. So I expect price on yields to retrace down to one around this ideal range and then start going back up higher. So when you have rising yields like this and you have a rising dollar, yeah, gold is going to drop off rip, off rip. So that was my mistake. So I know I was gonna lose trade. Like once I enter, after I was like 8 hours, maybe like 8 hours in on the trade, and I saw how yields was going. I said, oh yeah. And I saw how dollars was going too. I said, oh yeah, I'm about to lose this trade. So, but it's all good though. I have proper risk management, so I think this week is gonna be a comeback week. But yeah, so uh, other than that, I am bearish on gold. I guess like I told y'all, we're bullish on DXY, and then we also are bullish on yields, clear as day. You can see. So other than that, that's what I'm looking. Oh, for those who trade S&P too, I do trade S&P. S&P real quick. I'm gonna do a quick breakdown. So right now, S&P, we did have a nice little dip, right? I ain't gonna lie, I think usually with rising yields that put pressure on S&P. I think it does. Hold on, let me see. I think rising yields does put pressure on S&P. I gotta look it up. Don't fault me, y'all. I'm looking things up. You know what I'm saying? I forgot. So I like looking at other charts to help me understand. I ask ChatGPT. ChatGPT be helping me out a lot. I ain't gonna hold y'all, man. With rising yields, put pressure. With rising yields, put pressure on. The rising yields put pressure. Now, if you notice when I use ChatGPT, right, I'm not using ChatGPT to, oh, what's the direction of the market? No, I'm asking questions like, does rising yields put pressure on S&P? You know what I'm saying? Like stuff like that. You know what I'm saying? Or I actually have it set to where ChatGPT send me automatic messages at 5 o'clock every single day on macro events and what's going on in politics and how that affect the market too as well. So I know some people be selling these $40 memberships. You know what I'm saying? To have it keep up with the uh, you know yeah, all these different event calendars. What's affect the market. You can have ChatGPT do the same thing for you. You know what I'm saying? The rising yields put pressure on S&P. I think it does, but let me confirm it. Yeah, it does. So yes, this is what it says. So yes, rising bonds yields often put pressure on S&P 500, especially when the move is fast and driven by inflation concern. Here's why: higher yields equal higher borrowing costs. Companies pay more to finance growth, buybacks, and operations that can reduce profits and future earnings expectations. So you got stocks complete with bonds. When treasury yields rise, investors can earn more risk-free return for bonds, making stocks relatively less attractive. So the valuation compression, higher yields, increased discount rates used in the valuation models. This tends to hurt high growth sectors, most especially tech and long duration assets. So overall, it does. So if we go to my, let's see, my, I guess you could say my geopolitical automation system. So you can see here, it sends me stuff automatic. So yesterday, and I haven't been reading it. Cause sometimes I get tired of reading it. So I can read it to y'all. This is from yesterday, right? Dang, so I missed so much that I haven't been reading it. So it be sending me stuff every single day. So like for example, this is from yesterday. So bonds market are signaling rising systematic stress. What happened? U.S. Treasury yields surge again, like I've been telling y'all. Yields been going like crazy. The 10-year yield moved above 4.59%, while the 30-year Treasury climbed above 5.1% near cycle highs. Markets are increasingly pricing persistent inflation ties to oil above $100, ongoing Iran conflict escalations, and continued disruption around the Strait of Hormuz. Reports investors are warning equities may be underestimating the danger posed by higher yields and tightening financial conditions. Oil gained more than 10% last week as geopolitical tension intensified, and Trump warned Iran that the clock is ticking. And then y'all know, Trump and China, came together. Was like, hey, look, we need to stop this BS pretty much, and we need to let Iran know what's up. So I guess they back friends now. So anyway, so why this matter? This evolving into a cross asset tightening shock. So high yields are now impacting mortgage rates, corporate borrowing costs, equity valuations, and global liquidity conditions. The market concern is that energy inflation stays elevated. The Fed cannot ease aggressively, and financial conditions tighten faster than expected. So do you have rates? So the rates, treasury yields near 1 year highs, long duration bonds volatility accelerated. USD supported by, so obviously you see USD pushed up higher, and the gold it's a mixed reaction. So we already know with higher yields and higher uh dollar, that puts pressure on gold. And then you got equities, AI, mega caps still masking broader weakness, small caps and rate sensitive sectors. Anyways, and you got the credit conditions. I ain't about to keep reading all of that, but and then said what to watch next. Whether the 10-year Treasury breaks sustainably above 4.6%, additional escalation involving Hormuz shipping, oil holding above $100 on 110, and credit spread widening in high yields markets. Any shift in Fed communication towards renewal is hawkish. So, hold on, I spit. So, with that being said, so you see how like I use ChatGPT to help me on stuff like that. Not hey, what the market is giving me a breakdown of what's going on in the real world and how is that affecting the market. And with me already having knowledge on how to read charts, it makes it easier for me. So and it sends me these type of updates every day at 5 o'clock, every day. Put y'all on game, you know what I'm saying? But that is my market breakdown. I hope I gave y'all a clear direction, on what to decide for this week. Um, and other than that, if you do have charts for me to break down, just let me know. Put it in the comments. I don't mind. And other than that, I will see you on the next market break. Oh, but before I end, soon I will be starting a new series called Deeper Than Charts, where I pretty much going in more personal. My own personal experience. You know what I'm saying? My why. Just more relatable content. Of what made me got to trading. You know what I'm saying? Things I go through and trading just from this experience of just learning. You know what I'm saying? Just the emotional part of it as well. Just life itself. You know, like I said, my reasons, my why. Just like I said, just going more on a personal, deeper level. You know what I'm saying? So I think that's gonna be a good series. I think y'all will enjoy. So I don't do charts every single day. Eventually, I will have like maybe one day. I don't know. Maybe in the future where I might have like a little membership where you can be able to be part of my group and get more details. Obviously, I do once a week, market breakdowns. But obviously, I don't sit here. I try to weekly candles, so I don't sit here and keep constantly saying, "Hey, look, this is what I'm getting in at." Nah, I just see it one weekly. So I say that for like my actual membership. But other than that, as of right now, I'm gonna start doing deeper in chart series, and then I hope so. I think y'all really gonna enjoy that. So make sure you like, share, subscribe. You know what I'm saying? Especially if you get more value in this. And I will see you on the next market breakdown piece.